What's up, traders? Zach here from the Trading Network. I hope you guys are doing well. I have another video today from the TTN member request channel. Now, the member request channel is something that we have in our private Discord where members of our community are able to go into that channel and request topics for me to create videos on. Now, the topic that we are going to be discussing in this video is going to be the no trade zone, or the concept of creating or having no trade zones while you are observing the market activity and actively looking for trades. So Mr. Mad Yoda here from our community says, something I identified missing from my trade plan was a very structured mechanical definition of a no trade zone. This, I believe, would be a great rule or edge for sitting on the hands. If you've already talked about this, could you point me to that video? I have not talked about this, and it's actually a great question and a great topic to discuss, so that is exactly what we are going to do in this video. Now, what we're going to do specifically is we'll use Friday's price action actually as an example of how you can utilize no trade zones and just practice sitting on your hands. You know, I think one thing that everybody could do a little bit more of, or a lot more of, that would benefit them significantly is sitting on their hands. And for those of you guys who are not familiar with that term, it just means waiting and watching and observing the market activity and planning out what you would like to see in order to take a trade. So for me, what I do a lot of times is upon open, I will use market profile analysis, okay? But even if you guys don't use market profile, even if you guys aren't as familiar with it, or you're just getting started with it, you can do something like create a no trade zone upon the open to say, hey, I am staying flat, I am staying in cash, not taking a position until or unless level A breaks to the upside or level B breaks to the downside. So here I have Thursday into Friday's price action pulled up, right? This is basically the overnight session from the 4th into the 5th. And if I move price to the right a little bit, you can see here's the opening range. So right here, I'm in Mountain Time, so the market opens at 7:30 a.m. for me. So I'm just going to show you guys how I would treat without even using market profile. We'll get to that in another video, but without even using a profile, how you can create a no trade zone, or basically a contingency plan to tell yourself, I'm going to stay flat until or unless this happens. So what you want to do is you want to look at the overnight price action. And what I like to do is I keep it very simple. I simply draw a box or a zone that I say, okay, I'm waiting for this to break to the upside or this to break to the downside. So I see that we have sort of this pre-market high here, right? Here's the pre-market high, and here's the recent pre-market low. So this is sticking out to me, basically this wick low up to this wick high. This is a 987 tick chart, 1,000 tick chart. I use the 987 tick chart and the 377 tick chart in combination. The 377 is on the left side here. That is my trigger chart. All of my entries, every single entry is from the 377 tick. And I use the 987, which is also a Fibonacci tick chart, to give me context in the market. I look at the 987 and I ask myself, is price ranging or trending? And then I pick my specific play in my playbook based on the market context. So if I was sitting down on Friday morning and I saw this overnight price action, this sticks out to me tremendously, right? So I would probably draw some sort of a box, right? This is technically before the market open. And if I was being patient, I would say, okay, I'm looking for longs above this level and I'm looking for shorts below this level, right? Very, very simple. Most people, and I'm sure all of you guys can attest to this, it's very, very easy to get sucked into the opening price action, the first 5-10 minutes even. And if you wait, especially with recent price action, I mean, recent price action has really been rewarding patience. A lot of times over the last few weeks, especially, we have had to wait an hour before we actually got some sort of directional conviction or some sort of breakout from the pre-market structure, right? And that's okay. Sometimes you're going to have to wait, especially in a rangy, choppy, low volatility market environment. Sometimes you're going to have to wait 30, 45 minutes, an hour before you get conviction where your A+ setups will present themselves. So on Friday morning, I basically was saying, hey, I am not taking any trades, no trades at all, until or unless we break out of this range, right? That keeps me with a plan at all times. I know that if I find myself in a trade in this zone, that I've already broken my plan. Something is wrong, right? So that right there is a good way for all of you guys to practice creating a plan, even if it is something so simple as drawing a box around price action. You say, I am only getting long above here, I'm only getting short above here, or you can even add a caveat. I'm only taking longs down here at the low of the range until it breaks to the downside. I'm only taking shorts up here at the top of the range until it breaks to the upside. And then if it breaks to the upside, I'll look for longs, right? So there's different ways that you can do this, but it's so important. Even if you don't use the profile, this is how you can have a plan. Just draw a box. I promise you guys, it is so stupidly simple that you are going to be amazed and probably kicking yourself at how simple this is and wishing that you would have been doing something like this a long time ago. But have no fear, you can do this now, and now you know how you can have a plan regardless of whether or not you use market profile or simple just price structure overall. Okay, so now let's say that this was my plan, right? Upon open on Friday, we actually got a bit of a directional move quickly off the open. So you didn't even have to be very patient, but you can clearly see that price moves above this pre-market high, retests it as support in the opportunity zone, might I add, with some excellent, where was it? Right here. With some excellent oscillator structure, right here, right? Oscillators, PMART, BBWP showing volatility expansion, delta going positive. So we have a ton of confluence, great structure, a lot of technical factors in our favor, and this is according to our overall plan. And it truly can be as simple as drawing boxes around areas where it is not clear who's in control. So the purpose of me making this video is not to get deep into price structure and things of that nature, but I wanted to show you guys how important and how easy it really is for you to determine, hey, this area is unclear, or hey, it will be much more clear if I wait for this level to get broken to the upside for longs, or this level to get broken to the downside for shorts, right? And again, Friday's price structure gave us very quick opportunities after breaking out of this pre-market structure. But so many people, once again, just give all of their money away in, the opening 5 minutes. Let's go back to this other session here, right? So this is, okay, so let's pretend that we are just sitting down at the charts Thursday morning, right? So you could say box time. I mean, this is pretty clear if you want to draw a little smaller range, right? And if we're looking at the 987 tick chart, then we could go all the way back here, draw a little range like that, and say, well, if we break this low, pretty high probability that we get a short opportunity down to S2. If we break this high, pretty high probability that we get a long opportunity at least to this swing high, which also lines up with this swing high, and perhaps even up to Fibonacci pivot point, right? Market opens. There you go. This low breaks. You get a retest, a rejection of the opening range low, the opening print, rejection. Price moves down to S2. And this is tricky. Price can be choppy. It can be in a tight range. But just building the habit of saying, okay, I am much more confident in taking longs above this level and much more confident in taking shorts below this level will give you a plan. It will give you guidelines so you don't get chopped up in the first 5, 10, 15, 30 minutes of the session. Sometimes it will require significant patience. Sometimes you'll get great moves off the open. But if you can truly introduce the idea of having a no trade zone sometime when you're not very confident or when price isn't clearly moving directionally or giving you a strong opportunity showing your edge, sit on your hands until the no trade zone breaks to one side or the other, right? You guys can do this over and over again. I'm just going to delete London Open here, and we'll do just one more example. But look, I mean, this is pretty clear, right? We can draw a range like that and say longs above here, shorts below here. It really depends as well, how aggressive do you want to be? You can draw a tighter range and have a no trade zone tighter, right? But that if you truly get extension outside of, the overnight range, for example, again, you are much more likely to get higher probability opportunity. And you can see here, little retest of this prior resistance, and it was a fake out, right? So that is an example of how you can be patient and wait. And we got a range extension and then got sent right back down into range and pretty much just chopped around the whole day, right? So this is a day where you could say, okay, I'm only taking longs towards the bottom of the range. I'm only taking shorts towards the top of the range until or unless one side breaks and holds. And that is basically how our trade plans are developed. That is how we create our trade plans on a daily basis, not from drawing boxes around price action, but from using market profile levels, right? So a lot of times you can say, okay, well, I have these market profile levels. If yesterday's high breaks and holds to the upside, well, then I'm going to look for longs. If yesterday's value area low breaks and holds to the downside, well, then I'm going to look for shorts down to yesterday's low, right? And that's why we use market profile in combination with techniques like this, because it just gives us that much more information. So I'll show you guys one more example. I'll pull up some market profile levels here. Okay, so I just want to show you guys one more example with some market profile levels in here, just to show you how much easier it really makes, these no trade zones and creating these trade plans. Okay, so I just want to show you guys one more example with some market profile levels in here, just to show you how much easier it really makes, these no trade zones and creating these trade plans. So you can see here, our overnight high is marked off here at 13,157. And that would be a very important line in the sand level that we would use on a trade plan, for example, because if we break and hold above the highest price traded in the overnight session, and especially if we use that as support, that is telling us from a market structure and auction theory perspective that buyers are now viewing a price that was previously seen as too expensive as a fair price to purchase the instrument at, right? That is what auction theory is all about. It's understanding where larger time frame players are viewing the instrument at a fair price, at an overvalued price or an expensive price, or versus a cheap price or an undervalued price. And that is why we use these value areas and these points of control and these highs and lows of the session, because those are not arbitrary areas. That is the market shifting and giving us information that we can use on a day-to-day basis. So whether you're using market profile, whether you are using just pure price structure and you are sitting down at the market open or a little bit before the open every day, try to establish a no trade zone or a contingency plan where you say, okay, I am not taking any trades. I am not exposing myself to any risk until or unless this happens. That is what so many traders are missing. Most traders just don't have a plan. Most traders think, hey, I can long at support with the oscillators looking good and the candlestick structure looking good, which you can. That'll work sometimes, but you are missing a big piece of the puzzle. You are missing the bird's eye view. You are missing the map of liquidity that is price structure, whether you're looking at the profile or just, a candlestick chart when it comes down to it. So I hope that this video helps you guys, and I hope that this adds another element to your trading that you can use on a daily basis to truly trade more like a professional. Professionals are not on the edge of their seat, hunched over their keyboard 24/7 anytime that the market is open looking for a trade. No, they know exactly what they need to see a high probability setup or to put on risk. And a lot of times it's just waiting. I mean, 95+% of the time, we're just sitting around and waiting for our setups to present itself. You should not be in setup stalking mode 100% of the time. Shout out to Merritt from Apteros Trading, because he planted the seed in me a few years ago that there are basically two modes when you're trading. There is a setup stalking mode where you are hunched over your keyboard because you see an opportunity very, very shortly about to present itself, versus observation mode, which is where we should be 90+% of the time. We should be sitting back, chilling in our seat, observing the market, knowing that, hey, our level to the upside hasn't broken, our level to the downside hasn't broken, so we're staying flat, right? That is what most traders can't do. Most traders just can't be patient and wait for their setup. They just, with every fiber of their being, feel like they need to consistently and constantly expose themselves to risk, which is just the opposite of what we do. We are so picky. As consistently profitable traders, you must be so picky that a low probability setup that is outside of your plan is not worth your time, money, or energy. So understand that and really live that. You have to live that if you want to be a consistently profitable trader. So with that said, I'm going to wrap things up here. I hope that this concept sinks in with you guys. I hope that you enjoy these type of videos. If you do enjoy this content, I would greatly appreciate it if you would like, subscribe, and click that bell notification to be notified every single time we post videos here on the channel. And if you want to learn more about what we do at the Trading Network in our private community especially, check out our website, thetradingnetwork.io, where you can purchase access to our most popular product, the TTN Pro Trader Bundle, which includes lifetime access to our private Discord, where we live stream Monday through Friday at 9:30 a.m. Eastern Time. We share our screens. It is a two-way live stream where members of our private community are encouraged to join the stream, turn on their microphones, and chat with me and the TTN Pro team in real time as we all trade together. Now, it also includes access to our proprietary indicator package and access to our Fundamentals of Futures Trading course, where I teach 3 strategies: a trending strategy, a ranging strategy, and a reversal strategy. So you have different plays in the playbook for different market environments. That is so key. And again, most traders don't understand that there is no one-size-fits-all strategy. It truly does not exist. So if you guys are looking for strategies that you can follow with clear and concise directions, clear technical parameters, I would highly suggest checking out our Pro Trader Bundle. Now, if you guys are interested, you can also purchase all of those products standalone on our website, as well as one-on-one mentorship with me if you're looking for more of a tailored and catered one-on-one experience. I offer a 4-week program, which is 20 one-on-one hourly sessions with me on Zoom, and a 10-week program, which is 50 one-on-one hourly sessions. I develop a personalized plan directly to your strengths and weaknesses as a trader, and we work together every single day to get you consistently profitable. With all of that said, if you guys have any questions about any of the content that I have mentioned in this video, please feel free to email us at info@thetradingnetwork.io. You can also send us a DM on Instagram at the.trading.network. And I'm now offering free 15-minute consultations for anyone interested in talking to me for a little bit to see if a one-on-one mentorship program is a good fit for you. Please feel free, once again, to contact us any way you can get a hold of us, and we will help any way we possibly can. I appreciate you guys very much, and I will see you in the next video. Much love.